to my trading channel, First Class International Trading Signals channel, trading the right way wherever you are. My name is S and I'll be your host today. I hope you've been enjoying all my previous programs today, and as promised, every week we'll be doing one educational program. Last week it was international trading sessions. I hope you learned a lot from that program, and today we will be looking at trading in tiers or pyramid trading. So this is quite important when you start trading, or when you're struggling in trading, you need to make changes, etc. It's good to always put your investments not in one area, but you've got to change it around and put them in different areas just to make sure you get the balance right, etc. So that's why I thought it's quite important to go, as part of the education process, to teach you what type of trading you can do, in time frames, etc. So today we're looking at trading in tiers. So we've got intraday day trading or day trading or in trading in 24 hours. So we're just going to look at the positives and negatives. So I'm just going to give you some positives and negatives, and hopefully you can take some better with you and adapt to the information provided. So the in intraday trading, there's quick profits, so you can make quite big with small stops. So you can make quick profits. So you can put a trade on at 10 a.m, close the trade at 3 p.m, and that's it. That's the investment done for the day. Or you can place the trade at 6 a.m. in the morning and complete the trade at 6 p.m. in the morning, evening. So there's quick profits. You don't have to wait weekly, but look at weekly bars. So you're just using 15 to 30 minute bars there basically. And obviously you get a lot of news breakouts, etc. So that can affect the pricing. And there's also smaller stops. So technically, say you wanted to put a profit target of £200 and a risk target of £25. If your trade came right, so you made a profit of 8 to 1, so that's the smaller stops required. Whereas in long term, you've got the stops much bigger, can be hundreds of pounds, if not thousands. But obviously that affects your profits. Over long term might deviate. So another area is that there's many signals, so a lot of brokers and third parties offer many signals in this area. Constantly you will get a lot of signals in the area. So the markets are quite, in intraday trading, the markets are more liquid, so there's more movements. Whereas say in long term, say you hit a range, so your investment may be in for weeks before you may get something. Although at FCITSC we specialise in the longer term daily weekly bars, but in the intraday this does matter, it's more liquid. So another area is cut losses. So if you get into a wrong trade, you can get out of the trade quite easily, whereas on the weekly bar, if you go into weekly losses, the losses could be much more with regards to that. So let's look at some negatives. You'll be stopped out a lot of trades. So what will happen is, depending on the markets you're in, I won't say shares as much, but if you say you're in markets such as Forex or commodities or cryptos, the risk is that in the shorter time frames the trades, you could be stopped out of the trade. So it's a bit arbitrary. So there is support and resistance area, but say like in Forex, where it's 5 trillion a day, sometimes the stop areas will hit. The volatility levels obviously are affected in intraday trading. If there's a news breakout, it can work against you as well. The market can go against you rapidly and trip out your stop. So sentiment can ruin areas for months and years. So what you can see is the market can go flat for long term. So your investment or trade means you know, you won't make much profits. That's a negative for intraday trading. And technical, it's quite technical as well. So in intraday trading, it's quite technical to get your technical skills right with, say, with the signals, etc., and then news breakouts, and then sentiment, and then, you know, what market you're in. You know, it's quite volatile, and the profits could end up being smaller, and it's quite complex at times as well, intraday trading, when you have to combine them all together. Okay, so that was that. Overall, it's got negative positives and negatives with it, but for novice traders, I do recommend the longer, the daily charts, or worst case 4-hour charts, to begin with, the longer time frame with less investment, smaller scale investment. So instead of putting £10 a point, put 50p a point on, pound a point. Okay, so we just move on to swing trading or short-term trading. Swing trading is trading, once again, it could be hours or it could be a few days, but it's called short-term. You know, it's so much semi-intraday, daily trading area, short-term. The positives of trading over a few days or over several hours sometimes. There's good profits in it. So if you hit a trend, it can last, you know, say 7, 8, 9 hours, go into the next day and make profits again, and the next day again. It's quite easy if the market is trending. So if the market's trending, say you're in Forex, USD, JPY is trending, the trend will continue daily for a few days before it may even change. So there's no need to check the trades constantly. You're not on knife edge, so you can do other things. Whereas in intraday trading, that is not the case. But in swing trading, you may check every few hours, say 4 hours, but that's it. And there's many exits and entries, so you can get out once you've made a sizable profit, say end of day one or something. You can get out the following day or third day if something goes wrong, even if you made, say, incremental but smaller profits. The negatives with swing or short-term trading over a few hours, few days, is larger losses, and there's more data to contend with as well. So although we just signal on technical analysis, in the markets there's sentiment and there's fundamental analysis. Although at FCITSC we don't take sentiment or fundamental analysis into account. In the future, once my channel is up and running, as stated in my last week programs, there may be bespoke services, and when that time comes, you will see how much difference the factors can make. But at the meantime, just keep us subscribed into my channel. Yeah, so weekly trading is what? The weekly trading, the positives of weekly trading is there's no concerns for the trader. Like I said to you earlier, if you put smaller percentage trade in the investment, or we're looking at the technical analysis, there's no concerns. The position, because with smaller positions you get more advantage, you don't have to look, and a lot of work in weekly trading is done in advance. So for example, I provided the signals, you can go away, check them out, do your own homework, and then place your trade, etc. So the work's done in advance. It's a better setup, so you've got better trades because the bigger picture can be seen. So we at FCITSC, we're just looking for the signals we give is we just make sure we try and make sure is that the direction is correct. So it's when you take the profit is your own choice. We give an indication, but we make sure the direction can be seen. So the negatives is you do need some experience. That's why I've got this channel. So as we do educational I do education programs as well. So there's no concern. So the positives is no concern. So yeah, there's more work. So we've done the technical side, which is larger stops as stop losses. That's a negative as well. So you got to put the stop losses that you got on, much larger. So that's a risk. So if the trade goes the other way, you could lose large amounts of profits in this area. But overall, the weekly trading does offer relax. It's more relaxed trading because you know what investment you put in and it's long term. So say the market went with you, you just have to get the direction right. Then you're not really concerned because it's the amount of profits. Also, is if you're going to take a loss, you don't want to be taking losses every day, every few hours, over a few days, etc. So if you're going to take a loss, it's just one sort of loss. Even if the loss comes over a period of time, at least it's one loss is out the way. So in intraday trading or daily, say within a day trading, you can lose 5 days in a row, 5 trades. You have to recoup from your trades, but in the weekly chart bars, you just put trade on, you let it relax. It's more relaxing. If it does go wrong, you know that what your investment was that went wrong. That's a good thing about it. Whereas the other trading could be very mind-boggling, complex, and it can be back of your mind when you got trades on. I must say over the years, some of the markets like the Forex market it's gone mountainous, as in that it's just very hard to get a trend going in certain areas at the moment. So I hope you've learned a lot from this program today. Overall, I hope you enjoyed all the programs I've done this week, and then I'll see you next week. And please do subscribe to the channel. This was, I hope you enjoyed this program, which was Trading in Tears. Thanks, bye.